Hello everyone, welcome back to Chill Trades, the most accurate stock market channel on YouTube. And today we're covering PubMatic, PUBM, and this is a pretty good example of how accurate we are on this channel for the stock market. We've made many videos on this stock. This is one of many, so if you need proof, it's in the pudding. Go back and watch those other videos where we talk about the business more in depth. We break down more of our long-term thoughts on it. Today, we're going to be covering their recent earnings as well as going into the charts to figure out where it could go next. Please support the channel, help us get to 1,000. And then as a reminder, Friday live stream 7:30 Central Time. If you're here, stop by for that. Okay, let's get into the numbers. So PubMatic reported earnings, I believe it was yesterday. Was that, yep, yesterday. And they beat. Woo, surprise. Not surprised. We talked about it in the last video a few weeks ago that I said PubMatic is going to beat revenue. And just some more sentiment there. This is a growing programmatic platform for advertising. I break down past videos what that is. Go watch those. And people are going ham on digital advertising this year. It's not as crazy as the year before during COVID, but e-commerce is bigger than it was before, and people are finding new channels like PubMatic because of all the issues happening on Facebook. And I think PubMatic is experiencing that. The biggest call out I want to make here is their earnings per share. So we've been just seeing the last few quarters just really amazing growth in that. And what this shows me is that two things. One, that I believe that their technology aspect is they really have that down pat. They're probably not making as many changes as they were before. They were probably accelerating their headcount in the business in 2020, 2019. They've most likely slowed that down because they don't need to accelerate as much because their technology is mostly built out and needs less updates, which is a lower cost. The second thing that I believe is happening is that their customer acquisition cost is coming down. So because the platform has grown more, they're getting more organic conversion, so people hearing about them and signing up compared to having to show ads or having to find other paid ways to bring customers in to use your platform. So both of those things are happening in my opinion, which is really showing us excellent EP earnings per share. And we break down the numbers here. Let's dive into them. So revenue third quarter, 58 million, 54% increase year over year, which is really great to see with COVID being such a big advertising year. Seeing their revenue continue to grow 50%. You know, it's only 58 million. It's a pretty small company still, but seeing that 50% growth is the main positive there. The second main positive is their net income. So as I mentioned before, earning per share grows when your net income increases. And so we're seeing net income of 13 million versus 6 million last year, so 100% bigger. And their diluted per share 24 versus 10 cents. So these are really big positives because advertising companies have such large margins that you really want them to be able to see profitability quick. So if this company can continue to grow at 50+% year over year and continue to see their net income grow, that's going to show us a really good long-term perspective for this company. I think there's short-term ways to trade this and long-term ways to invest in this stock. And these are showing us that this is something to still keep in our minds for long-term. So let's see here. What was that main call? I want to actually go above. So as I mentioned before, it's right here. Fourth consecutive quarter, best-in-class organic revenue growth. So organic revenue growth, not having to pay for things. That's a really big win for the company, as I mentioned before. Not having to pay to get customers, which shows that their platform is good because people are staying on the platform. The second thing is people either telling other people about their platform and they're signing up, or people are hearing about it for XY reasons and they're coming and signing up and using the platform. Let's look at a couple things here. So net dollar retention, 157%. That's really good to see. That means they're being able to put some money on the side, put some cash on the side, which is a really big win. Right here again, net cash operating activities, 24 or net cash provided by operating income. So their net cash has increased significantly year over year, 600%. Big win. They're becoming profitable and significantly profitable, which is a really big win. Total cash equivalents, 136 million. with no debt. No debt. No debt. Super big win. That instantly increases their valuation. Seeing large growth and no debt, super big win. And it's a 12% increase. So as I mentioned before, they are growing. Let's see what else they're saying here. Process trillions. Anyway, this just shows us that their inventory of where they can show ads for people is growing. So one is their customer base is growing. Two is that they're getting more exposure for their customers, which is a big win. Fastest growing advertising platform, CTV, grew 64% year over year. Really big win. CTV is a really big thing growing right now in advertising. We're finally getting more data that show that CTV is pretty impactful on a customer journey. So before, things like TV commercials, we're seeing CTV. So you have a smart TV, you open up a platform, you get a commercial, something like that. We're seeing really big growth in the industry there, and this is something that PubMatic does. But there's a lot of other details here, not as important. I just wanted to mostly go over the finances. And to back that up, a couple other things. Right here, we talk about in every video, but look at all the insiders who've been buying on this, on the dip, or the institutions buying. Guys, and I said this in the last videos, follow the money. When we have such big buying compared to selling, this is a small company, so, and especially small shares. They don't have a lot of shares. This company only has 49 million shares total and 19 million on the market. So seeing such big buying volume in the hundreds of millions is a big win for this company. So that's all I have on that part. Let's go ahead and get to the technicals. So a couple things to big picture. Let's get to daily real quick. Is see what happens when we break out of long-term downtrends. We had this long-term downtrend and we're breaking out. We went sideways, which is consolidation, which I mentioned in the last videos on the breakout. And now we're getting a vertical movement. The pro is hopefully in the last video, we made it here. I said, do not buy yet. It's not going to break above 30. Like I said, most accurate channel on YouTube. It came down off some bad news. This was a perfect buying opportunity. I said, guys, wait for a pullback to buy. It pulled back twice to 26. You had two opportunities and then blast off on earnings because we knew they were going to beat. We've talked about it over and over again. On the con side, we're not overbought yet on the daily. When we go to on the hourly, we were overbought. We've pulled back from there. And on the 4-hour chart, we're still, we're just under overbought. So on some time frames, we are overbought. We have pulled back a bit here. One thing I do want to call out is we have this kind of long-term uptrend forming, which is really what we wanted to keep in the long term. When we have these big spikes up here, do not buy these big spikes. The risk is not worth the reward unless you're day trading. If you're day trading here and you're like, shoot, like I'm going to buy, say here, I think this was before earnings, right? Yeah, this was before earnings. That was a good buy, but you should have sold. Buying at these high prices typically doesn't make sense because technically it's getting too overbought. When we dive in on the daily, our moving averages, our 20-day moving averages, I always talk about these. We're getting way too extended from the 20-day moving averages. The stock always comes back to the 20-day moving average at some point. It moved here bigger, it came back down. So knowing that this is in this support zone, because of earnings, it might not. If we see the overall market continue to pull back significantly, larger than a couple percent, we'll probably get some more weakness and maybe break below this trend line. But we're starting to form a really good long-term uptrend. And so as this 20-day continues to raise or go higher, we want to see how this stock responds. If it does something like this, and then the 20-day eventually comes up into this range, if we see the 20-day, the gap fill, and we eventually get to this upward trend line, that's a beautiful spot to buy, which is probably going to be in this range. So I would say if we continue to pull, I think we are going to continue to pull back, most likely, unless we get a gap and go. So two things happen when we see gaps. The first thing is it gaps, it breaks out big, and then it slowly starts to come back down to fill that gap. The second thing that happens is we have a gap and go. So it breaks up, it needs to cool off a little bit, but what it does is it finds resistance above the gap, maybe even goes a little bit into the gap, but then starts firing off again. So that's more of a gap and go. So that's something we want to pay attention to, is if we can't hold this 35 range and get back into this gap, the gap is most likely filling. And honestly, that's the best case scenario if you're looking to get into a new position here, because there's two ways to play this. We like PubMatic on this channel, so this is a long-term hold for us. But within that, there's ways to play that. So for an example, on this big break higher, which was way too violent too quickly, we basically went from $26 to $41 in a couple days. This is where you want to buy a put option. Buy a put option a couple weeks down the line and say, I think it might pull back to the gap 32. If you bought a put there up at this top, that's a $10 move, you're definitely making at least 100%, if not more, on that put option. It doesn't mean you sell your shares that you own, but you're leveraging to make more money on something. And then when it comes back down to this zone, what you do, if you want to acquire some more shares, if you believe in it at that point, you buy some more shares. Or if you want to play, another short term, you buy it there, and if it moves back up and it hits back to this long-term resistance zone, you sell there for a short gain, a $10, $15 gain. But getting back into the macro, because I kind of went off topic there a little bit, we are hitting up on this we're hitting this big resistance zone. So when we zoom out, this right here is a really important resistance zone. We most likely are not going to break above 44 in the mid to short term. Unless the stock market goes crazy over into the Q4, so the rest of Q4 into the end of the year, unless the stock market goes absolutely insane, we see the SPY go up 10 more percent, we see the NASDAQ go up 10 more percent, we see the RUT, which is the Russell 2000, go up 10 more percent, we're probably not going to see this break above 44. That's just too violent too quickly. Like I said, we have this long-term trend line, and we want that to hold in the long term. We'll get these moves higher, we'll come back, get the moves higher, come back, but we want to keep this pattern. And so on a move higher like this, you want to wait for a pullback so that you buy down here and then it runs up. You buy down here, it runs up. That's how you buy. And so this 44 is really, I would say, a really hard zone for this to break back above. The stock is getting a little expensive based on revenue. We're at about $2 billion valuation. I think PE ratio is at like 100 or something. So it is getting a little more expensive at in this mid 30s to $45 range right now. We want it to come back, and we slowly want it to trend up, because when it slowly trends up, that means the stock price can move in sync with the growing revenue. When things get too vertical too quickly, it typically leads to downside significantly for these small companies, because growth in the price moves higher than the growth of the company, and it has to come back. And so this range is really significant. Like I said before, support zones we want to keep an eye on are right now, is where we're at. If we can hold this 35, very bullish. If we come here, this 37 to 35 range, a lot of now new support. If we don't hold that, look for the gap fill to the downside to around 32.50 and see if we can hold there. Hopefully the 20 moving average will move up to that point, up to that time at that point. And let's go ahead and look at the 100-day moving average. So there's the 100-day. Let's see what this 100-day is. So the 100 days are at 30. So if we gap fill to 32, if we can't hold that gap fill, look for a pullback to the 100-day. This is most likely not going to come back that far, most likely, unless the market tanks. And, we can probably see these start to curl up. They're just starting to curl up. And so as these start to curl up, they're going to curl up to this $31 and $32 range. And we're also going to see the 20-day move up into that 32 range. So I would say we're most likely going to have really big support at 32, and we're going to need to hold that if we don't hold $35. So those are some price points to look out for the short term. Please come back to the channel. Like I said before, Friday live stream. Please come back 7:30 Central Time on Friday. We talk about whatever stocks you want. So appreciate you guys tuning in. See you next time.